Hey everyone, we got some big news out of Intel that sent the stock price down more than 7% on that news. Of course, the big headline coming out of that update was that its foundry business lost $7 billion. I'm going to dig more into those details and discuss what this could mean for Intel stock investors. And I'll also update my recommendation on Intel stock. I'll answer if this dip here is a buying opportunity or if it should make investors stay away. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, Intel stock price is down over 7%, 7.1% to be precise, as of this recording as the news came out. So what was that news? Well, the company filed an 8K detailing some changes, and let's go dig through these details and understand what it all means and just go deeper than just that headline number, right? Let's see what's happening here. So the disclosure, Intel saying that its Intel products consist substantially of design development of CPUs and related solutions for third-party customers. Intel Foundry consists substantially of process engineering, manufacturing, and foundry services groups that provide manufacturing, test, assembly services to their Intel products business and to third-party customers. So they're separating it out. They're reporting this segment now in a different way. And you might ask, why do companies do this? Why do companies restructure, report things in a certain way, and then report them in a different way? And they seemingly do this every few years, especially with large companies like Intel. You see bigger companies do this a lot. Disney recently did this several times, and they reshuffle and reorganize how they report things to investors. And while this is speculation on my part, one of the big reasons I think companies do this is because of the way investors value certain businesses, right? So you think about Intel. What's the big business that Intel wants to be a part of, wants to be recognized for right now? It's artificial intelligence, right? So it's going to do whatever it can do to make itself viewed more as an AI company. Or if it was viewed as a 20% AI company, it wants to be 25% AI company. It wants to be thought of more as an artificial intelligence company. So part of this reshuffling, in my opinion, again, speculation on my part, is to try to get that respect from investors, because investors, as you probably already know, are very enthusiastic about artificial intelligence stocks. You can see what's happened with Nvidia and other AI related stocks. They've absolutely soared to the moon, while Intel is kind of trailing behind that industry. So it wants to be thought of more as an AI company. So it does this reshuffling and reorganizing to show itself more of its AI business, to highlight more of its AI business. And arguably, that's what I feel it's doing. But let's continue. So they also previously announced their intent to operate Altera, an Intel company, previously Intel's Programmable Solutions Group, as a standalone business. It was previously included in the DCAI segment results. So they're stripping out Altera from the AI segment and reporting it separately. Again, this could be because it wants the AI segment to be more attractive, to look more attractive to investors. But this is not going to have any changes to Intel's consolidated financial statements for the past, right? For 2023, 22, and 21, or any other periods. It's just going forward. It's restructuring how it reports things. So here is that number you've probably already read in other headlines, that its foundry business lost $7 billion. That's this number down here, $6.955 billion in loss in the foundry business. That's up from 5.169 in the prior year in 2022 and 5.067 billion in the prior year before that. But it seems like there is nothing new here. It's just the way that Intel is reporting these numbers now. They reshuffled these, presented them differently, highlighting this loss, making the headline number look truly, truly massive in terms of the loss. 18.9 billion in revenue, 6.9 billion in losses, and that revenue number was down from 27.49 billion in the prior year. So Intel provides a little bit more discussion on its foundry business, saying they are strengthening the resilience of the global semiconductor supply chain for leading edge and mature node semiconductor products by investing in geographically balanced and more sustainable manufacturing capacity. That's no secret, right? There's been a lot of concern that the supply chain was heavily focused in Taiwan, and Taiwan Semiconductor Manufacturing Company, which is one of Intel's main competitors in this industry, itself is trying to diversify outside of that region. It's making investments in Japan, Arizona, and other countries to try and diversify away from its focus in that area, given the riskiness in that geographic region. So Intel saying we are executing on our strategy of delivering 5 advanced process technology nodes in 4 years and committed to achieving process technology leadership by 2025. We're working closely with the U.S. federal government on the implementation of the U.S. CHIPS and Science Act in support of the semiconductor industry. The U.S. government launched incentives in excess of $50 billion for expanding manufacturing capacity for semiconductor chips, and Intel wants a piece of those incentives, and so they're investing to try and capitalize on that growth in that incentives from government. They're giving money to companies like Intel to expand manufacturing capacity domestically. And so the push to bring artificial intelligence everywhere is driving transformational changes in the global market for semiconductors. AI demands an ever-increasing amount of computation power, ubiquitous computing for users, pervasive connectivity, cloud-to-edge systems, and networking infrastructure. Our IDM 2.0 strategy includes the pursuit of complex manufacturing and growth opportunities by making significant capital investments in leading-edge semiconductor technologies and foundry capacity to establish Intel Foundry as a major provider of semiconductor manufacturing solutions for third parties. We have made and continue to expect to make significant capital investments in furtherance of this strategy. So, in other words, Intel is strongly committed to this business, to this opportunity here. And as an investor, I would be happy with this commitment. I do not own Intel stock, but if I did, I would be happy with this commitment because this is an industry that's been highly profitable. I could show you Taiwan Semiconductor's operating profit margin and cash flow from operations for the last several years to demonstrate just how lucrative this business is. Taiwan Semiconductor is one of the most profitable businesses in the world, and in terms of cash flow from operations to sales, is trailing behind only one or two companies, and that company is one of my favorite companies in Visa. So Taiwan Semiconductor is a highly profitable business, and the industry overall generates strong profitability. So I would be happy with Intel making investments in this category, especially as investments and demand for implementing artificial intelligence is soaring. So Intel stock after this drawdown is now trading at a forward price to earnings of 17.52, near the lowest it's been. In fact, the lowest it's been in the last 3 years, and it hasn't benefited from that wave in increase in stock price like many other semiconductor companies have. So to update my recommendation on Intel stock, do I think the stock is a buy on this dip? And I think yes, I think Intel stock is a buy on this dip, and I'm updating that recommendation today, April 3rd, 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.